AKP. Just wanted to send you a short video here on how I optimize. You're familiar with the strategy analyzer, I'm assuming, so I just select the TF614 contract, optimize, pin that out, select the strategy, and what I do is by default quantity of 1, I want to exit on the close, entry handling to all, entries per direction are 1. I use the pH genetic optimizer. I optimize to the max net profit, optimize the data series to true, slippage to 1. I include commissions. On instrument settings, I have a custom session template created here. I believe I've mentioned to you before, it's just 9 to 5, Monday through Friday. So I select that, and then I just go back a 2-week period from whatever day it is. I was starting to experiment with moving a day forward as every day passes. So like say here, we on this week I would have tested from the 17th through the 28th, and then I would have let the optimization numbers that I had acquired from the test run from the 31st to the 4th. You know as well as I do that the market changes every single day. So what I was looking at was, okay, say we run this 2-week test here from the 17th through the 28th, and then after Monday I will run a test from the 18th to the 31st, and then I will use those numbers if they are different for Tuesday, April 1st. And then likewise, as we move forward, I would have moved the test from the 19th through the 1st, and then use those numbers for the 2nd, and then again the 20th, the next day I would have optimized from the 20th to the 2nd and used those numbers for the 3rd today. But just for the sake of this video, I'll show you what I do here. Just go through all the motions. So February, March, so go 17th to 28th. On the data series, I just run that on I've drilled that down to about a 15-minute time frame or less. As I said, I want to be able to just trade the most active period in the market, which is about 9 to 5, obtain whatever profits we can, and then get out at the end of the day. So that's 15-minute up here on the CGO. The breadth of its cycle is from, obviously you can't go from 0, you have to go from 1 to 100, and that's the breadth. As I said, that's the breadth of its frequency limit is 100. And I'll go up here to exit at end time to true. Leave this at backtest. Run the optimization. You'll get this pop up. This is just verifying all the parameters that you've set over here. Just click OK, and in a few seconds that will disappear and your optimization is underway. depending on the processing speed of your CPU. Um, it could take a while. Um, you see, mine is pretty quick. I have a pretty powerful computer, and I don't even think that took a minute. But anyway, then you can just look at these, kind of put these in order. And usually I have a pretty good idea of this should typically not trade more than 1 to 3 times a day at max. So if you maxed it out, that's 15 times. You're looking at like 30 times maximum in a 2-week period. That's just too much. I mean, you better be racking up some pretty good profit to overcome your commissions on something like that. Because let's see, I've run the commissions at about $12 round trip, so 30 times 12 is that's 360. I'll just round it to $400. I like to have my profit factor above 2 or pretty damn close to it. As I said, I like to keep the total number of trades down low. Percent profitability that's sort of a gray area because it can be a low number, but you can still be significantly profitable. Obviously, you want to look at your drawdown and your gross loss. Another factor to consider. Well, there are a number of factors I consider, but others are the maximum consecutive winners and losers. Obviously, you don't want to start off with, say, 4 losers in a row. Is like right here. That's 770, $840, $840, and you certainly don't want to start off with that. So where I will also look at the Monte Carlo simulation, and then a number of factors in here to consider. Looking at the probability of just that fact of starting out with a string of losers, as well as you're probably familiar with this, but you can look at break down your trades and look at the specific times that most of the profitable trades occurred, when most of your losers occurred, and just the analysis possibilities are just endless. But we'll look at that. We'll also look at the maximum adverse excursion, and that something you have to keep in mind here is that this is an average, and if you look at your charts, to verify, to just physically verify that this is all working properly, you can see that in some instances, you could have a $400 drawdown, and I think this is kind of misleading here, because this drawdown is based on the maximum number of losers that you can have in a row and the highest losing trades that you've had. So if we were to look through here, just so this, and I apologize if you're already aware of this. I don't want to beat a dead horse, so to speak, but as I understand this is supposed to indicate, and I can't seem to find it here. Let's see. There's about 700, 1,010, 700, 840. I'm not sure where they're getting this number, because it's not a combination of all of this combined. Let's see if we're even. Okay, it's because we're not highlighting those numbers. See here. Okay, see, I'm sorry. That is, my explanation is correct. This, I had not highlighted these numbers. See, our maximum number of losing trades here is 7. That's why this maximum drawdown is considerably higher. And what this is you just find a string of 7 trades, losers, and add this up, and that's going to be your maximum. I would never accept these numbers, because that's just not acceptable to me at all. Even with a $50,000 or $100,000 account, it might be a little. That might be acceptable on a $100,000 account. But I would. Let's see, look at the next one here. Let's see what we're looking at there, 3 and 5, and the average MAE is about $1.50. So we've got a couple here with the drawdown is considerably lower. However, we're really pushing the limit on the number of trades, and the profit difference, the total net profit difference you see here is not that much. I mean, you're talking $330 difference from here to here, and that's this one's actually better because it trades less, and you come out with a little bit more total net profit. Your gross loss it's about $500 difference. However, there's 7 trades. Your drawdown's a little less. You've just really got to pay attention to the number of trades, your drawdown. The profit factor is a little less than I like here. And I can generally tell by looking at the time frame and the cycle of the CGO. Like this here, I don't know if you can see this, but it's saying that that's 2. And I can tell you, if we click on this, yeah, it says it's 2 and an 11-minute time frame. If we were to look at that on a chart, see, this thing is going to be so choppy. That frequency is so choppy. That's not going to work. It needs to be smooth. This right here is almost luck, or I guess if you want to call it over optimization, you could. But just by virtue of its frequency changing so much, you're getting lucky. See if I can find one. See, this is what your frequency should look like. It should be smooth, like I think I told you I'm an electrical engineer, so if you look at the cycle of most things that like say electricity or radio waves or anything else like that, they follow a pattern, and they're relatively smooth like this. And this is how this calculates. When you get into something like this, you're just getting lucky. So at any rate, I look at all of these things: the total net profit, the gross loss, the drawdown, and the number of trades, the percent profitability. As I said, I also look at the number of winning and losing trades, and the the number of consecutive winners and losers, as well as going into the Monte Carlo simulation and looking at a number of other factors in here and pulling up some, doing some comparative statistics there. It's a fair amount of work to do every week. However, as I said, this strategy isn't robust enough to, and it doesn't have the self-optimization code in it yet. But I think once I am able to marry these two codes that I have, this ATR predictor that I had mentioned to you, I've got two really good building blocks here. I think this will be something pretty phenomenal. But I hope this gives you an idea of what I'm doing, and how I do it. I appreciate any feedback you have, or questions or anything, and if you have any insight or anything, just shoot me an email. All right, talk to you soon.